Don't fight Papa Dow.
No,
That's
trust me,
fantastic.
I learned in the best way. and and when you
Ask him.
don't,
Be like, JC wants to know if you should fight Papa Dow.
no,
Be like, no, never fight Papa Dow.
no. What's wrong with bubbles? That's a first question right now. So, do you see anything wrong with bubbles?
Are you going to ask him or are you asking me?
No, I asking you.
I love bubbles. I don't know why everybody gets so upset about bubbles. I mean, just go back in time. The best times ever to make money is in bubbles. And you know the best part about bubbles is that they usually last a lot longer than people expect. So it's even more money than, that's really where technical analysis comes in, is that, any idiot could buy something that goes up. It's when do you get out? And not
That's
just when you're right, but when you're wrong too, right? In other words, setting parameters, be like, okay, I'm going to be long this stock or this cryptocurrency or this natural gas future or whatever it is. Doesn't matter what it is. It's always changing. It's the SPACs. It's the marijuana stocks. It's the Bitcoin. It's software stocks. It was energy stocks. I've been around for a few cycles, so I remember a time where it was commodities. Anything that had to do with commodities and industrials and machinery and global growth and emerging markets were the best places in the world. Well, guess what? It hasn't been that in a long time, to the point where people have forgotten. But it's different characters, different asset classes, but it's the same story.
yes, it's the cycles. It's just different assets, but the cycle will continue and it's not gonna stop. So
It's never going to stop if there are humans involved. If there's humans and money involved, those are the two key ingredients. Humans and money, because our emotions are elevated, our stress levels are elevated when there's money involved, and we revert to just evolutionary behavior that goes back to our ancestors. But we're not running away from lions. We're just too long this $1.30 cryptocurrency. We have way too much of it and we can't sleep, because we're too exposed. So we behave in those ways when money's involved. So as long as humans and money's involved, we're going to keep seeing the same cycles. The asset classes are going to change. The characters involved are going to change. Housing, marijuana, Bitcoin, it's just the same thing.
All right. So let's start with, okay, so what do we have here? So Nasdaq advancing decline line. So what do you can see right now?
Well, I think it's important that, to identify the fact that stocks in general peaked in February of this year. And, some people are looking at me like, oh, JC, you're an idiot. The S&P is at all-time highs. Or the NASDAQ is at all-time highs. Or the Dow Jones Industrial Average is at all-time highs. And while that might definitely be the case, the new 52-week high list in the NASDAQ peaked in February. The NASDAQ advanced decline line peaked in February. I have these charts here. The IBD 50 peaked in February. Emerging markets peaked in February. The IPO index peaked in February. Biotechnology all peaked in February. Again, the NASDAQ advanced decline line, the NASDAQ new 52-week high list, all of those things peaking in February. That's when things were the best. If you recall, everybody was coming up with a SPAC, right? That was the hot topic of the day. The IPOs, all of them were popping. I mean, those were good times. When you go down the cap scale, outside of those mega cap names that drive things like the S&P and the NASDAQ and the Dow, when you look at the small caps and micro caps, for example, they stopped going up in February too. And they've been doing absolutely nothing. I think it's worth pointing out. And then just the cyclicals in general, where's this here? The New York Stock Exchange composite has much more cyclical exposure than the technology exposure in the NASDAQ. So in the New York Stock Exchange, over half of the largest 100 components are actually international companies. They're ADRs that trade on the New York Stock Exchange. So what does that mean? You're going to get a lot more natural resource exposure. You're going to get a lot more industrials. You're going to get a lot more financials. All of that exposure increases, so it's more cyclical. So those peaked in May. Financials stopped going up in May. Materials stopped going up in May. Industrial stopped going up in May. And you could really see that on the New York Stock Exchange advanced decline line.
Okay, so based on this, you see a, so right now the Nasdaq is an all-time high. So based on the, there's much room to keep going up.
The Nasdaq being at an all-time high here. The Nasdaq 100 is making all-time highs. The Nasdaq Composite is also making all-time highs. Apple's making all-time highs. So more what I'm sort of really getting at is that just in general, most of the market has not been going up. The average drawdown in the New York Stock Exchange, in the Nasdaq, is over 20%. Your average stock is down 20%, over 20% from the highs, pushing 25%. So when you ask me, people ask me, JC, is the market going to correct? It's like, well, the market has been correcting for 6 months, and it's very typical of year 2 of cycles. So here we are in 2021. Last year, we had a massive thrust higher. In fact, the best 52-week performance for stocks going back to like 1940 or something like that, something ridiculous. It was like the best year ever. So this is now the hangover of that year-long party. And it doesn't necessarily need to be a bad thing. Like that party can continue tomorrow, but, you know, we need to kind of rest, you know, like that was a killer run. Now let's take a deep breath, drink some water, you know, get some food in our system, maybe go for some exercise, and then eventually that we can start partying again. But when you go back in time and you look at like 2009, for example, major low after the financial crisis, again, a monster thrust off of those March 2009 lows. What happened in 2010? Chop, chop, chop. It was a messy market. When you go back to 2003, we had that initial thrust higher after the tech bubble burst in 2003. What happened in 2004? Choppy, messy market. You know, go back to 1983. What happened in 84? Choppy, messy market. Same thing in 1976. After that initial thrust, 74, 75 was an amazing year. What happened throughout 76? Choppy, choppy, choppy. So this year 2 hangover effect of that initial year 1 party is actually perfectly normal. In fact, if we weren't seeing this sort of behavior, that would actually be abnormal. But if you go back to all those periods, what happened after year 2? Stocks went on to do very well. If you recall, sure, 2010, 2011 was starting to get messy. What happened after that? 12, 13, 14, 15, all great years, and then we ended up peaking in 15. When you go back, what happened after 04? 2005, 2006, 2007 was great. Sure, financial bubble, but what a great time to be making money. That was a hell of a party. I remember. I was working on Wall Street in New York City at the time, and they were some killer parties. And then, you know, go back in the 80s were great after that initial thrust and that, you know, choppiness in 84. And then the late 70s were great too. So why not this time expect the same thing? You know, a hangover for year 2, let them digest, let them, you know, let the world kind of gather its breath. And then we move on and make higher highs.
Yeah, so actually, that reminds me of a conversation that I recently had with our friend Ralph Acampora, that he say, enjoy the ride, the irrational exuberance is going to be for a little longer, so enjoy it. So what do you have for Papa Dow Jones? What is Papa Dow is telling us?
Well, what Papa Dow is telling us is that the Dow Jones Industrial Average is making new all-time highs and the Dow Jones Transportation Average is not, right? And so Papa Dow, you know, listen, I'm not, for me, you know, the whole Dow theory thing is not a timing mechanism. It's really just an assistant to help identify the direction of the underlying trend. That's really all that is. And the underlying trend obviously has been up, but for transportation stocks, it has not. Does that mean the stock market needs to crash? No. It's just further evidence that the industrials, I have an industrials chart that I want to show, and I can't seem to find it. Where's the industrials chart? Here we go. So remember that all 20 stocks in the Dow Jones Transportation Average are in the industrial sector, right? The S&P industrial sector, the XLI. And remember what we mentioned before, that peaked in May with all those other cyclicals, with the New York Stock Exchange advanced decline line and all those things. And what have industrials done? Nothing. Just choppy, choppy mess for 4 months now, right? So then when you think about that as a space and where it's happening, right at a key Fibonacci extension level. Your boy Ralph, what does he say? Fibonacci, Liberace, what does he say? The consolidation in industrials taking place by my Fibonacci, Liberace mathematics at a perfectly logical place. So if industrials are going to consolidate, we're going to get this choppy mess. This is a perfectly logical place for that to happen. So again, to reiterate, all of the stocks in the Dow Jones Transportation Average are in that messy index. So I think they really need to get going and start moving in the direction of Papa Dow up here to really confirm that the uptrend can resume, because most stocks have not been in an uptrend for 4 months, even 6 or 7 months in some cases. So we've been in a correction. You might call it a stealth correction, right? People call it, because it's taking place underneath the surface. It's being hidden by the large cap indexes, because the headline is NASDAQ hits all-time high, or S&P 500 hits all-time high. Like, it doesn't say, oh, but like it was only 5 stocks that made new highs. So yes, just a heads up. Like, you're not going to get that subheading because that just doesn't sensationalize enough, right? And they're not in the business of telling you what the market is doing. They're in the business of getting you to read or watch or listen to whatever they're publishing, right?
Yep. How about the different sectors that you have, financial sectors or the other ones that you also pay attention?
Yeah, I mean, listen, bigger picture, when you look at financials breaking out of a 14-year base, I mean, hello, like what is there not to like about that? Like, that is everything you want to look for in a chart. I mean, everything I want to look for in a chart anyway, but short term, peaked in May with all those other cyclicals, with materials, with industrials, with the New York Stock Exchange advanced decline line, a lot of international, right? So like industrials in this sideways mess. I mean, that's just the story of cyclicals in general. Materials look the same, but a little bit worse, but basically the same idea in materials. And then when you look at Berkshire Hathaway, people forget that Berkshire Hathaway is the largest component of the financial sector. It's 15% of the financial index. So you got a lot of insurance and stuff like that there. And then, of course, the railroads and certainly industrial exposure there. So kind of like, you talk about cyclical and value investing, these are value sectors. Like, these are value stocks in these sectors. So Berkshire Hathaway is kind of like the perfect, for me, Berkshire Hathaway is like another index. You got like the Dow Industrials, the NASDAQ, the Russell 2000 small caps, Berkshire Hathaway, yep. It's one of the, right. One on the list.
And what's going on with the small caps? Do you have that chart too?
What's going on with small caps is that there's nothing going on with small caps, right? Right? There's nothing going on. It's like, I live outside New York, and there's Jets fans. Like, what's going on with Jets? Nothing. They're gonna suck again, So small caps, nothing. They stopped going up in February with with so many other things. IPO index, emerging markets, biotechnology, the growth in general, the NASDAQ advanced decline line, the NASDAQ new highs list, like so many things just stopped going up in February. And small caps are right there at the top of the list. In fact, if you really zoom in, you want to get really technical, about things, as soon as small caps made new highs and then they broke below those former February highs, that's when we knew. That's when we knew at the very least we were entering a messy period. How long the messy period was going to take place was really our bigger question. Like, okay, we just had failed breakouts in small caps and micro caps and a whole slew of other things like, raise cash, let's get defensive. That was really sort of, let's raise cash, get defensive, and then ask questions later. Right? It was really sort of with that failed breakout. And then, like I said, we were confident that we wanted to be defensive, because if we broke out to new highs, then that whole defensive mentality is invalid, right? So it's perfect, right? We're going to know we're wrong very fast, but chances are we're not going to be wrong, and this is what we want to do, and that's exactly what happened. So like I said, the bigger question was not, should we get defensive or not, is how long is the mess going to last? And we were in the camp at the time, because of what financials were doing, breaking out of a 14-year base. Europe was also breaking out. So you had massive breakouts. So the thought process was not, oh, the world's coming to an end. This is not 2020 all over again. This is not 2018 all over again. This is just going to be more of a mess, was really where our thought process was. Again, how long is the mess going to last? Here we are now, 7 months almost into this, because I think the exact date was like February the 7th, February the 8th, something like that. Oh, no, mentira. February the 8th and February the 9th. Like the new highs list peaked the 8th and the AD line the 9th, or vice versa, but it was those days, 8th and 9th. And today is November the 8th. So that's 7 months that we're at this now. That's a long consolidation.
Yeah. So actually, how much was the correction for Tesla? I think it's one of the biggest corrections on any stock. I don't know if you had the chart.
The average stock is down over 20% off its highs.
Okay.
You know, so we're seeing massive drawdowns underneath the surface. Massive.
Okay.
And rotation, though, because what happens, you know, the software stocks, the growth stocks are getting hit in February and March, right? Particularly on a relative basis. And the cyclicals continued, industrials, financials, materials, even energy still making new highs into June, right? And while the growth stocks were struggling. And then what happened? That flipped. The growth stocks took over again, and it was the cyclicals that have been hit over the last 4 months. So even though things are not getting better, the rotation keeps it from getting worse. And your boy, Rafa Canfora, what does he say? Sector rotation is the lifeblood of any bull market, and you're seeing it.
That's correct. Yeah, that's correct. And how about, you have European stocks? Like if we want to compare the US with some European stocks and see.
Yeah, you know, what's really interesting about European stocks is that you're going to get a lot more exposure to financials. You're going to get a lot, I think 3 times as much industrials, and then like a fraction of the technology, right? So it's a completely different trade than if you were in America. And then when I look at the Euro Stoxx 600, I mean, the bigger the base, the higher in space. You know, This is like Luis Yamato 101. You know, I remember, I'll never forget it. JC, you know, she would even like when like we had computers already, she would just like still like print out the charts and hold it over her head. And she would be like, the bigger the base, the higher in space. And the bigger the top, the bigger the drop, right? I remember like this was like when she was, you know, when it reminds me of in 2008 at the CMT Symposium in 2008, in the spring of 2008, she had a Citigroup chart relative to S&P 500 with a massive top. And she's like, you see it? The bigger the top, the bigger the drop. And, you know, like, how can you forget that? This was 13 years ago, right? More, 13 and a half years ago. And again, I'll never forget it. And, you know, same thing, bigger the base, higher in space. And then why is that? Because there's so much built up frustration. There's so much like nobody's making money. You're stuck in this range. When you finally are able to surpass those former highs, that is the market signaling that the demand has finally been able to absorb all of that supply that has been in place for so long. In the case of Europe, 20 years. Wow. So now we can go on. I mean, no progress since 2000. I was in high school last time Europe was making, you know, was up here. Like it's a long, long time ago. I'm not a young lad anymore. And then when you focus in on the Papa Dow of Europe, you look at the Stoxx 50 index, you know, we got a lot of room to get up to those 2007 highs. We're still nowhere near the 2000 highs. I mean, nowhere near those 2000 highs. So much upside in the mega cap names out there. Again, you know, a lot more, 3 times the industrial exposure, a fraction of the tech exposure, more financial exposure, like twice at least of the energy exposure. So completely different. Look at the VGK, which is the Vanguard fund. That'll get you done. You know, Germany, new all-time highs. Even Italy. You know, Germany's one thing, right? That's the blue chip out there. But when they're buying Italy, you know, I don't know what they're drinking up there in the Baltic, but look at Sweden, Finland, Lithuania, Estonia, all making new all-time highs. Like I said, I don't know what they're putting in the water over there, but they're making them buy stocks. Like, man, Lithuania, Finland, just, I don't know. It's not bad. It's not a bad thing. Speaking of bases, look at Japan. Right? Just massive bases in the Nikkei, 30-year highs in the Nikkei. Toyota breaking out to all-time highs. You know, these stocks have done nothing for so long. You know, so a great ETF, EWJ, breaking out of a 25-year base. What's wrong with that? And then when you kind of go down the quality scale, with all due respect to Mexico and Poland, you know, just from an investment standpoint, you know, you're going down the quality scale. Czech Republic, new all-time highs. Poland, new all-time highs. Budapest, new all-time highs. Mexico, new all-time highs. You know, you look at Argentina pushing against new highs. You know, it reminds me of Mercado Libre. So looking at Meli, you know, a breakout above 2070, and I think you got to buy it. And then, of course, what's happening in Asia, you know, Taiwan, of course, new highs, you know, being led by Taiwan Semiconductor, which we can buy here if it's above $120 I like it long. And then India, just in emerging markets, continues to rock and roll. HDFC Bank is a great one, above 73. I think you own it. And the worst of emerging markets has really been China. And does it look that bad?
No, not at all.
It doesn't look that bad to me. I mean, if this is as bad as it gets, like I said, it doesn't look that bad to me. With emerging markets making new all-time lows on a relative basis, I don't think the secret's out. I don't think it's a secret. I think it's out. And when you have the Economist magazine back-to-back covers, one of them is a rainbow going into a trash bin that says emerging markets growth problem. I mean, geez Louise. And then the next one, 2 weeks later, you got a Chinese guy stepping on all of the companies in China, all the tech and internet companies. Like, by the time the Economist gets wind of this trend, let's ask ourselves, is the Economist usually early to the party, or are they usually a little late? So I think that pessimism to emerging markets and just the strength that we've seen, and then just to reiterate where the weakness has been, when you compare Chinese internet and Chinese technology, notice that Chinese internet is way worse and it's below those 2018 highs, while Chinese tech has held those former highs. That former resistance turned into support, if you will, when in Chinese internet it did not. So when you look at the components, why did one hold and not the other? When you look at Chinese internet, you have Alibaba and you've got JD, and you don't have that in Chinese tech dragging it down. So we've had an Alibaba short on, and our target was just hit right at $160. So I think you leave it alone. You cover shorts, you move on, and with the Economists as bearish as they are, and the China Shanghai Composite not looking that bad, I think you want to look at Chinese tech. Stay away from the Chinese internet, and I think you go towards Chinese tech.
There's so much potential on that, and especially what's going to happen, I believe, when all these massive news and everything turns like in a positive way. I think there's also very positive for next year and at the end of this year, I believe. So how about let's talk about commodities. What do you see for gold? That's another big topic right now, because it's being under pressure, but it's trying to keep to the all-time high, but some corrections also. What do you see on that?
Yeah, I mean, it's hot garbage. Is really what it is. It's hot garbage. Stocks have had massive runs. I'm just looking at a 10-year chart here, but even short-term over the last year, just massive runs. Commodities, massive runs, right? Every commodity under the sun. Everything's working. Everybody's making money. Crypto, everybody's making money except the gold bugs. You could have bought anything else in this entire here planet, and you would have made money in the last year and a half. Except for gold and silver, right? So what does that speak to? It speaks to relative weakness. It's the opposite of relative strength, right? And when you look at what's happening, and you look at gold futures last August running into those former highs, gold is consolidating at a perfectly logical place. This is the exact same place they started selling off in 2011. Same place. So if gold's ever going to sell off, this is a perfectly logical place for it to happen. So the fact that it's been the worst asset on planet Earth since last August, so over a year now, I mean, think about this. Silver closed August at the lowest monthly close of 2021. So not only is it not working, it keeps going down, right? So, I mean, just terrible place to be, but so much potential when we resolve higher, though, right? I don't understand why everybody has to be in such a rush, like inflation and the Trump and the this, and we have to buy gold and the bunker with the guns and the ammunition. Like, why do we have to be in such a rush? Software stocks are making all-time highs. Like, relax with your guns and ammunition. Let gold break out of this base. Is this beautiful base that the gold bugs keep telling us is what it is? Late 90s, early 2000s, and then one of the greatest uptrends in the history of any asset class ever? Is it that? Yeah. Maybe. But if we're below the 2011 highs, it's not yet, right? Which is all that matters. Being early is the same as being wrong.
That's correct. So you have to be a little bit patient to just keep the monitoring.
What's the rush? What is the rush? Why does everybody have to be in such a hurry all the time? I'm not going anywhere. I'm 39 years old. I got a baby. I got nowhere to go. I got nothing but time on my hands. And when gold breaks out, we'll buy it. Why do I have to buy it now?
And now let's I know you're very excited with the digital asset, and I saw your presentation for the last symposium that we had. And so if you can share some of the charts, because that thing is very interesting market right now, because all the volatility, but also what's going to happen in all these, massive information being delivered by social media, but also what investors are doing in regards to the Bitcoin and asset allocation.
Yeah, I mean, listen, it's just a beautiful display of human behavior. There are no fundamentals, right? I mean, there's stories, right? There's like stories like, Fugazi, right? There's stories, but in terms of like, and interesting stories, right? When I was buying Algorand today. Like, I don't know the first thing about Algorand. So instead of going to do the homework and figuring out if I want to buy it, I buy it, and then I go watch YouTube videos about what it is, like for fun. Not that it's going to have any impact whatsoever in my decision-making, but just like as a nerd, as somebody who just like likes markets, and like I'm fascinated by what these things are doing, because I've had a front row seat to all of the inefficiencies of Wall Street for almost 20 years. Front row seat. I mean, I could tell you how many things are wrong with Wall Street, mostly because the conflicts of interests among parties is really what creates this. So they're trying to eliminate that through these protocols, and it really is fascinating. It's like, oh yeah, stability pools where you deposit your and you stake and it pays a yield. I'm like, oh, so like market makers, got it, understood. Or it's like, oh, yield farming, and I'm like, oh, got it. Kind of like reinvesting dividends. Yeah, we've been doing this shit forever. Got it. This makes perfect sense, right? So that's sort of how I look at it. I go and do the homework. I'm like, oh, this makes a ton of sense. This is fantastic, right? Yep. Again, it doesn't impact where we're buying and where we're selling. We let price determine that. But I find the stuff interesting.
Literally the best, in my personal opinion, the best explanation of supply and demand 24/7. There's no weekends. There's every day is something's going to happen. That's very interesting market.
Yeah, I mean, never a dull day. Trades 24/7 as opposed, 24 hours a day as opposed to 6.5 in the stock market, right? When you think about the difference, I mean, you're looking at almost 4 times the amount of trading minutes. So it's, I mean, really, really fascinating. Here we're looking at Bitcoin. Just classic. I mean, when you talk about technical analysis, I mean, this is like, you told me that this was from Edwards and McGee and it was a chart of like RCA or something like that back in the 40s, I would have been like, yeah, sure, right? But I mean, it's supply and demand. I mean, how many times have we seen these like head and shoulders tops or rounding tops? Speaking of what Louise Yamada was saying, the bigger the top, the bigger the drop. That's exactly what this is. This is what she was talking about. And she was talking about a chart of Citigroup before the financial crisis. And now here we are talking about Bitcoin. One has nothing to do with the other, but the patterns are the same because that's just human behavior. And that's how markets act as they are topping. It's distributive in nature. It's the market distributing supply. So what happens is that you have a floor, and we refer to that as support. And every time the level gets there, it reiterates just how important that support is. And as you can see, when Bitcoin gave way in May, what did it do? It broke that support. So then where did it ultimately crash down to? Former support from back in the first quarter, right around 30,000. And that's ultimately what held as support, that 30,000 that held all year. And what was really interesting is then you have all of the journalists that think they're technical analysts go in and be like, hey, that's a head and shoulders top in Bitcoin. And it's like, no, the head and shoulders top already completed and reached its downside objective. And now we're looking for a long. And this is when they were telling me that the Head and Shoulders top had completed, and we took the other side of that one. And boy, did that work out well. And we got there much faster than I thought we were going to get there. But our target was all of that former support. Obviously, what else would my target be? Like, you know, not that I want to be short Bitcoin at those prices, but that's where we want to take profits. That is, you know, a logical place, you know, and bam, we're talking about a 60% move higher. Like, nice trade, call it a day. Doesn't mean it can't go higher. In fact, it probably will. The question becomes, how long are we going to have to digest all of that overhead supply that broke back in May, right? There's a big battle to take place there. And sure enough, we've seen a big battle there. The bulls seem to be winning. 46,000, I shouldn't say they seem to be winning. They're right there. 46,000 is a big level. You know, you really want to see Bitcoin above 46. Below 46, it gets messy. You've got a lot of downside risk. You've got opportunity cost. You know, so we're looking at Bitcoin there for sure. And then another one interesting to point out is Cardano. You know, those former May highs. Those are the levels. If we're not above the May highs, you can't own Cardano. This is the no-go zone. Bad things happen down here, right? This is the no-go zone. You only want to be long if we're above those spring highs. Otherwise, this is a massive failed breakout. And what have I learned is that from failed moves come fast moves in the opposite direction, my friends.
Oh, yes.
That is not what I want to do.
How about Ethereum? Do you have Ethereum there?
I have Ethereum here on a monthly closing basis. This is not the updated chart. But what I want to do is I'm going to show you a chart of a new trade that we just put on. Let me just pull that up and give that to you. So this is Algorand. So this is one that I'm watching. This is up 40%, 35-40% on the day that we're talking. Algorand, just to put things in perspective, Algorand is the... So Algorand is the 19th largest cryptocurrency, sitting at $9 billion. So it's $1 billion away from technically being a large cap stock, just to put things in perspective. So this is Algorand, ALGO, and potentially breaking out of a massive base. For me, I like the relative strength. For me, I like the relative strength. You know, if we're making new all-time highs and breaking out of this base, what's there not to like? What's there not to like? So for me, $1.80. If we're above $1.80, I like it long. How high can we go? I think we can go really high.
To the moon. At least those feeble levels. That's the best way, I think. Is
yeah. I mean, listen, those are certain levels for me. You know, if Bitcoin breaks out here and we get back into the 50s, and Bitcoin makes a run back into the mid 60s, you know, Algorand could be $4 or $5. $10, why not?
Yeah.
And right now it's at $1.80. The risk reward there is very favorable. So we haven't broken out yet, but we're close and above $1.80. I like this long.
So JC, where people can find you? So where people can see you're gonna share your social media, where you're more active? I think Twitter is one of those.
Yep, yes. Just All Star Charts. If you have any questions, you can always email info@allstarcharts.com. You know, go to the blog right there on All Star Charts. Everything's posted there. You can find us on YouTube at All Star Charts, Twitter, StockTwits, and Instagram at All Star Charts. I'm easy to find. Shoot me an email, say hello, say hi on Twitter, and you know, I'm happy to chat, share some charts, talk markets. It's what we do, right? If I'm not talking to you, Juan, I'm talking to somebody else about it. So it's all good.
So JC, I remember one of your videos. I think you guys went to Japan. That's one of my favorites. For asking for candlesticks.
Yeah. Well, I mean, if you're gonna find candlesticks anywhere in the world, you figure Japan would be where you find them. And we went to, we went all over town. We went to the fish market. We got more sushi than candlesticks is what ended up happening. We went to the Tokyo Stock Exchange looking for candlesticks. No candlesticks anywhere. We went into the library at the Tokyo Stock Exchange. No candlesticks. Nowhere to be found. Isn't that ridiculous?
Yeah, well, let me tell you something. I don't know if you know the story behind Steve Nixon and Ralph Acampora.
What is it?
Oh, I don't want to tell you. You need to ask Ralph. Ralph, what's going on with Steve Nixon in his famous book? Where he got it? How that happened? So it is a really fascinating story. I'm not gonna say all the details, but
all right, I'll ask him.
Yes. Well, my friends, thank you so much for your time. I do appreciate every time that I talk to you about charts, about how you see things, and it's very interesting your analysis. And the last thing I'm going to ask you is, so you're going to say something en español. Bro, todos los amigos que nos están viendo siempre quieren escuchar un poco de tu español. ¿Cómo estás español?
Bueno, cuando estoy hablando con abuela, estamos hablando de arroz con frijoles, churrasco, ropa vieja, vaca frita, platanitos maduros fritos, riquísimo que hace mi abuela. Ay. Pero cuando estoy hablando de negocio, estamos hablando de las líneas de tendencias y el RSI y todas esas cosas.
Cuando yo vaya para Miami, quiero comer contigo en un restaurante cubano, en ropa vieja. Eso está, anótalo. Quiero que me lleves a un restaurante cubano.
And then we'll get fritas. You know the fritas?
No la conozco.
The fritas are hamburgers, but with chorizo in the burger too, with the little papitas and the cebollitas.
Okay. Hay que probarla. Tenemos que probarla.
Yeah, it's a Cuban hamburger. Frita.
I have to try that one.
Yeah, it'll clog your arteries.
Well, once a year is okay. You can.
Or we get like a croqueta preparada, which is a sandwich with Cuban bread, ham and cheese, and croquetas. Oh my God.
Well, my friend, thank you so much for your time. I hope you have a good, day, and hopefully to see you soon.
Thank you. Hope to be up there by you soon too.
Take care, man.
All right.